Morning everybody. It's Chris here from Serene Education with the Four Majors Analysis update for the 11th of August 2011. Hi guys. As per usual, looking at the four majors this morning, starting with the Euro against US dollar on a daily. What can I say? I mean, look at this. A full week of I'll do one thing and I'll see if I can try and better it. I'll do one thing and I'll see if I can better it. I can do one thing and then I'll see what I can do better it. It's crazy, absolutely crazy. We see bearishness and then we see positive, followed by bearishness, positive. That's just confirming how much negativity or how much indecision or volatility there is in the market these days. It's one punch counteracting the other, and people are getting stung. I mean, especially people that are trading intraday. If they don't know what they're doing, this can be very, very detrimental to people's trading accounts. If you know how to trade it, then yeah, it can be very, very profitable. Don't get me wrong. Lots of movements here. You know, we're seeing good 100 pip moves in some cases, consecutively over consecutive days. It's just being able to try and manage how to actually trade that. If you're trading long term, rather stay away. We want a clear signal in the market, and just looking at this just gives you bad taste in the mouth, to be honest. There's no clear direction. It is a definite consolidation at the moment now, a very, 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 very strong consolidation area. You can see 1400 previously was a very strong support and resistance level here. You can see long term we've had a number of touches throughout most of this year. You can see that the highs are getting lower, so we know we're in a consolidation to the downside, even though we're in an upside move. The major trend is still up. Okay, I just want to put that in so you guys can see it. And we're seeing price now at this trend line. Okay, so one or two things could happen. All the negativity with a squeeze like this, we need to see a breakout. There has to be a physical breakout somewhere. Someone's got to pop the lid out on the cork bottle. It's either going to fall to the ground and crash and burn, or we're going to see break to the upside and we're going to trade that. So ideally we want to see the market to give us an indication of what's likely to occur. Yeah, it's at the moment now it's trading within a range, a very, very console range. You can see the last 3 days, both the highs and lows have been literally the same. So if I just draw my famous box here, you can see that we're the upside. However, we've had 1, 2, 3 consecutive trading days where the price range has been literally equal. The lows and highs have almost been identical in any case. You can see this morning, yesterday's low, we closed lower, but it didn't close lower than the previous day, which happened to be not lower than the previous day. So we had 3 days, and we're going into the 4th day now where the support is literally at the same level. So we're looking at 1700, thereabouts, 1800 as a very strong level of support. So to break that support, you hit straight bang. And you can see price traded this morning on early Asian market trading. It tested this major trend to the upside, and it's nailed it. Okay, so it hasn't traded any lower, and you can see now that the open is higher. So we had a close yesterday, and the open is literally opened, and we've gone slightly lower, pierced through the support area. As you can see, it's happened on a number of other occasions before, and we've seen a jump to the upside. Are we going to get another equal drive that we saw the day before? It seems to be a pattern happening here. So as long as it's trading above this 1700, then ideally we're looking for further upside movement, because it has forged a very strong support level. And at that level too, if you look back in the past, you can see noticeable support and resistance happening at this level as well. So bodes well. We are trading above a price support and resistance level. The major trends in our favor, and you can see the upside movement is with the euro against the US dollar this morning on early market trading. So going into the US session, if we can stay above these areas, above the 1700, then is bound to be further upside movement going into the US session. So ideally, if things carry on as the way they do, then, as has been the case on the past 2 days, then we should be looking at the high end of this, the high of this at 14,3700 as being our first target if you're on the daily. So CTC is giving us a negative signal. CTC on the other side is giving us a blue. We are still above a major trend, and we are trading above a very strong support level as a market trading. Is there any news out today that could factor into this? We've got ECB monthly bulletins out. Other than that, we have trade balance figures out in the States. That could be very, very interesting. That's going to be this afternoon. So, and then we have the unemployment claims to go with that at 1:30 GMT this afternoon. So they're expecting the forecast for trade balance to be obviously lower than the previous figure. In this case, it's only 3 billion difference. Previous was 50.2 billion. The forecast is 47. If it comes out lower than that, well, it could very be detrimental. We know there's a slowdown in the market globally, but we saw some very strong trade balance figures out of China when everybody was expecting a negative figure. So it could be one to watch out on. Unemployment figures there again, very small change expected there. So there again, if we can stay around those figures, then we could see a consolidation of some sort. But as it stands now, euro is definitely moving to the upside. If we go into our smaller time frames, you can see, for example, as I mentioned, 1700 or 1800, we have a support area in that case, and you can see here, and look at that, a massive hammer, an inverted shooting. It's above this area here, hammer, a lot of price action to the downside. However, price closed indecisive to the top end, which happened to fall around a price support and resistance level, and we've seen price revert to the upside. Even though the CTC is giving us a sell signal, this candlestick pattern here found at price support and resistance levels are very strong change in market sentiment candlesticks, and sure enough, we've had negative indecision at a support resistance. Okay, everybody wants to go long now because this happens to be a very strong daily support and resistance level, and we've seen a bounce. Psychologically, there's been a bounce, a buy back into the market, so that's going to happen. Hourly, same thing has happened again here. You can see, if I just look at it, CTC now on an hourly, a 30 minutes, 50 minutes, all looking blue for long. So 30-minute trading above the institutional moving average, which happened to be prior resistance over the past couple of hours, well, since 8 o'clock yesterday, and it's now trading above that. And as long as it can stay above that institutional moving average, then there's more likelihood of a further bounce to the upside. Notice there's been a swing just recently going into 8 a.m. this morning. So if everything bodes well for this pair, we should be looking at the higher end of the wick, or the highs at 14,400 as our first target, as I mentioned. So look for price to stay above this level, and if it can, then what we're doing is we're looking for, you can see price is trading thereabouts at prior resistance. If we can get above that, so trading above 14,2800 going into the latter part of this morning, would see or give us the confirmation of further upside movement to at least the 14,400 mark, unless there is something really drastic that's going to change the minds of the euro this morning. Straight on to sterling against US dollar. I did mention to a lot of our students yesterday whether we need to see a clear indication of a break lower than this consolidation pattern that we've seen over the past 2 weeks. Look at it. It just looks like a huge wart at the end of this little uptrend. This consolidation of massive magnitude, as price has just been so indecisive at this level, which happened to coincide with a prior consolidation range that we saw in late May, early June. And we needed to see some sort of indication that price was likely to see a downside. We needed a nice bearish candle, in this case, to break below the 16,2500. We got that yesterday on sterling. Bang, straight through. However, we're now seeing price testing a price support and resistance level roughly around the 16,1200 mark. Look at that, support, breakout, resistance, support, and now we're at the level again. So, which coincides with the 200 institutional moving average on a daily. So you can see that the change in market sentiment is starting to move or wean. You can see the US sterling is starting to wean against the US dollar, because we're now testing this institutional moving average quite close compared to when you saw when price was really, really bullish. You can see that the institutional moving average is it was very far away from price action. Now, as we've gone into this very volatile cycle now over the past couple of months, you can see that price is now testing it on a number of occasions, confirming that market sentiment is changing. We are seeing a slowdown in the UK market, and the more negativity that comes out of euro, because the more we're going to see the sterling taking a bit of a strain because of the close trading ties that we had with the euro. It just goes hand in hand. You can see the CT now with yesterday's candle punching lower on the indecision candle the prior day. We want a decision. This is the decision, but however, we want to see price trading below 16,1200 or ideally below the institution moving average to give us an indication. Yes, this is a definite bearish indication. We have the first indication that we should be looking for shorting opportunities, because by this candle closing low, we have a swing low, which happens to be lower than that, so we know price action is changing. Ideally, we want to see price continue to the downside now. So any entries you might have would have to be below 16,1200. You can see there's a pullback as you speak. With a big move, there's a pullback, and that pullback has come at a support level, noticeable support and resistance level in the past. So ideally, all it needs to do now is break below that very strong support resistance level, and then we should be looking at ultimately the 1600, because we've been there before, and that ultimately is a very strong psychological support and resistance level. If I zoom out, you can see that bang, bang, a lot of support through the early parts of January, February, March, right through April, yet again in June, July. So 1600 is a very strong area. If we break through that, then it's just free fall. So got to see a break below 1200 to see further shorting opportunities. CT is giving us that. We are seeing an intraday consolidation. Just have a look and see if there's anything intraday. You can see the 4 hour is still looking negative. CTC is still telling us negative on the bounce. We know that there's a strong level of support and resistance in that area on the institution moving average. Bang, you're seeing that. There again, CTC is still looking negative. If you look at the hourly, for example, you can see the highs are swinging lower. If you draw a trend line there, you can see that price action is going to start playing with that trend line very close to the 16,2300 mark ish. Or you could see price bouncing higher at 1627. We've been in the past. There is a definite strong support and resistance level there. However, price is testing this price support area here. Failure to break this intermediate trend line that we're seeing intraday would depict, if we see another consolidation at this area here and a failure to break higher and then a bearish engulfing, then the CTC is definitely going to be showing us that we should be still looking. This was just a consolidation pullback. If you look at where price traded from, you take a fib retracement. 38.2 fib area is in play as you speak now, and that's a very strong area. 38.2 is always significant in retracements. The 50 is also within those rounds, but if it goes to 50, if it also break above 50 or 38, then we should see price just rolling over, and we could see the lower ends of 16, 1100, 1200. As I mentioned, got to be trading lower than 16, 1200, closing lower to definitely depict further downside movement. So bide your time. Could see consolidation ranger. If it's trading above 61.8, then we know that the actual the overall trend is still counteracted trending, and you should be looking for further upside movement. If it fails to break above the 50% and we see a bearish engulfing, then look for your 1611 and lowers for the trading range for it. Next up is the US dollar against Swiss franc. We had a slight gap down yesterday and a small trading range, a spinning top of some sort. However, a slight consolidation after having this negative this selling that we've seen after this slight consolidation breakout just recently. Notice the swing lows depicting price trend, but you can see overall that the trend is well extended to the downside for this pair. CTC is right across the board, beautiful for swing trading, perfect setups for trading long term. And you can see price action has just literally fallen away as the US dollar has lost ground against US dollar. So we know that the US dollar against Swiss franc is trading at an all-time low. There's been a lot of news out there that the Swiss government would or should intervene to try and stem this. They might be putting in place certain monetary policies, QE in particular, that could actually help with that, or we could just see good old-fashioned intervention to try and stem this negativity at the down part. I don't think intervention is really going to do anything. It's just going to put up a ripple, but the ripple, I don't think, against the entire move of the market, I think is going to be too little. They're going to have to put in something that's going to be A lot longer to do, but QE, yeah, it could work. But we're seeing a slight consolidation now. Asian market trading, we have seen a push higher from yesterday's close. Are we seeing the Swiss government slowly coming out with policies that might stem this downside movement, or are we just seeing a consolidation after 2 days of very bearish selling? We're seeing it. If that was the case, then if you took from where we saw the selling to the close of yesterday, we could be looking at 38.2 or the 50% area as potential pullback areas before we see a continuation of the downside as the major trend is depicting here in this short time frame. That could be our ultimate target here at 61.8 is the highest it probably could go. 50 at a long shot, but we are seeing consolidation. If you look at the intraday, you can see that consolidation on the 4 hour, for example, going sideways. It's now, you can see yesterday, for example, failed to break above the previous low, the breakout. Any gaps in the market are potentially filled 98% of the time. Here's another one, gap down, filled, and then continued. So we could see the same thing happen here, guys. Just be very, very aware of that. Gap down, filled, we saw the squeeze. There's the bearish indicator for further selling, entry level, and then we saw price revert to the downside. If I look at the trend engagement, you can see price action. This area is a lot thicker, so if we see break above here, then we could be ultimately looking at roughly the 70.45 mark as a potential target. But we are definitely in a consolidation range. If you look at the hourly, for example, CTC is still extended bearish. Price is testing a 50-period moving average as we speak now on this time frame, the hourly, which happened to be a prior high that we saw yesterday. Got to close quite positive above that before we can even think about looking at a potential trade to at least the 70.50 mark intraday. CTC is still very negative. The overall trend is still against us. And if you see a break and close over here, then a potential target could be the 7.45, 7.50 mark if the CTC falls in our favor. We are getting a small indication of possible moves to the upside. The 15-minute is testing the 200-period moving average as we speak, which happens to be the same area where we saw prior resistance and support on a larger time frame. So failure to break above there and consolidate above this area here, then we're just going to see a revert to the downside, looking totally over the rest of the remainder of today. The last pair of the day is US dollar against Japanese yen. You could see that the US dollar is back down, testing prior lows. After we saw the break of the 80 just recently, we saw the Japanese government trying to intervene. We saw price rally, test the 80, and subsequently keep falling back because there's nothing really there to prop up the figures or the buying options in the US dollar because everything's just looking negative for it. And we are now testing, we've now broken through price support area on Asian market trading this morning, and going to the European session we're still looking for further shorting opportunities after the spinning top created yesterday at the support level. So we wanted to see a decision candle after spinning top, and it looks like it's coming out today. We have been as low as not so long on the first two levels, roughly around the low here at 76.33, so that could be our initial target. We've been there before. Yesterday we almost touched those levels, so 76.33 could be on target for this morning. As long as it can stay below the support going into the US session, then we could be looking for a slight pullback, consolidation, and then continuation to the downside. If you look at the intraday, that depicts, you can see the breakout here. If I just zoom back, you can see there's a different support here around the 76.80 mark. So bounce, 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 breakout, consolidation. Are we seeing the extension now? We need to see price trading below that area. If you can stay below the 76.80, it would definitely depict that we should be looking for further shorting opportunities. We have been to 76.30 in the past. There's no reason why we shouldn't be looking at that again. CTC is dictating that we should be looking for further shorting opportunities. All the moving averages above us, above price action. You can see here, for example, in 30 minutes, over the latter part of this morning, the 50 and 20 period moving averages acting as a ceiling level, and price has failed to break break higher than that. The 76.80, as I mentioned, is a strong support area. Price has broken through it, came back to test it again, fell to rally, and we're trading lower as we speak going into this morning's trading session. So we could be looking at the 76.30 mark as our next potential target. We've been in the past, and there's no reason why we shouldn't be going to all those areas for the further. You can see the CTC is still well extended to the downside. Notice how the 50 period moving average is acting as a strong ceiling level for this pair. Slight hesitation here now. We're starting to see a bit of consolidation. However, prices fell to materialize on that consolidation. It fell to bounce higher. Sentiment is still looking negative for the US dollar. The overall effect is looking bearish, and sure enough, we are seeing that to the downside on this pair. That's it, guys, for today. I hope you have a fantastic trading day. Please, please, please follow the rules of the CTC if you are trading with them. Make sure you back it up with sound money management rules. And most importantly, just look for breakout consolidation patterns to see if you can actually gain any momentum. We are seeing a lot of volatility, so your entries have to be that much more confined. You're not going to find as many decent breakouts, and if there are, then you might see a volatility pulling it back. Euro is a good example on a daily. I mean, we've seen equal drives, massive down candle for one day, and then a total opposite reaction the following day, and vice versa. So that will happen in the market. So depending on which pairs you're trading, that volatility will change. Just be aware of any news announcements that are going to definitely make any ripples in the water, and make yourself familiar with them before actually trading at any one time. Otherwise, happy trading and trade serenely.